Welcome to a new deep dive. You turn on the news today and you see Russia and China projecting this, like, unstoppable military and industrial might,
Yeah, they really do look like global juggernauts right now.
right? But if you actually lift the hood and look at the absolute latest economic data from July 2026, you see something, well, entirely different. Both of these regimes are quietly shifting the massive, unsustainable costs of their global ambitions directly onto the backs of their own struggling citizens.
It's a classic facade, really. The state looks formidable on the world stage, but structurally, I mean, the domestic foundation is just cracking.
Yeah.
We're watching two different systems employ the exact same strategy, which is basically burning their own middle class to keep the war machine and industrial engines running.
Let's start with Moscow, because they're obviously still pumping cash into the military. But that initial wartime economic boom has completely faded.
Oh, absolutely. It's
I
gone.
mean, their GDP actually shrank in the first quarter of 2026, and the growth outlook for the entire year is sitting at a pretty dismal 0.4%.
And to understand how they're even keeping the lights on at this point, you really have to look at the deficit. They racked up a 5.73 trillion ruble deficit in just the first half of the year.
Wait, trillion?
Trillion, yeah. And to plug that massive hole, the state is effectively stealth taxing everyday Russians. They're letting inflation run hot, and they're stripping resources from local economies.
Right, so ordinary citizens are paying for this global posturing through worthless paychecks and failing infrastructure.
Exactly.
Because, I mean, if you were living in Moscow right now, you wouldn't be feeling that 0.4% growth. You'd be feeling the reality on the ground, which is fuel shortages leading to rationing, crippling interest rates, and an official inflation rate sitting at 6%.
Which everyone feels is drastically underreported, by the way.
Yeah, of course. And even their big bragging point, this supposedly low unemployment rate, it isn't a booming job market, it's a severe labor shortage because military mobilization is pulling bodies out of the workforce.
It's a devastating cycle. Like, you read through these July reports, looking at the EU's new targeted sanctions on Russian drone electronics companies like ABS Electro, and it feels almost secondary.
Oh, really? Secondary to what?
Well, those sanctions complicate military procurement, sure, but the true existential threat to Russia isn't really coming from the West. It's this internal, self-inflicted financial rot.
It really feels like watching a homeowner violently rip out their own copper wiring and, like, burn the living room furniture just to keep a massive, intimidating security spotlight shining on the roof.
That is a great way to put it. And you see this exact same dynamic sacrificing the domestic middle class to project global superpower strength playing out in Beijing right now, too.
Though the mechanism looks a bit different there, right?
Yeah, it does. They are basically masking deep domestic fragility behind massive state-funded industrial output.
But wait, if the domestic economy is so fragile, how are they posting 4.3% GDP growth in the second quarter? I mean, they've got $3.4 trillion in foreign reserves, and they're cranking out advanced manufacturing and EVs. Those top-line numbers look incredibly strong.
Right, but that 4.3% number is doing a lot of heavy lifting to hide what's happening at the household level. Real estate investment just plummeted 18% in the first half of 2026.
18%. Wow.
Yeah, and because property has historically been the primary wealth engine for the average Chinese family, that drop effectively erases household wealth. Consequently, retail sales barely grew by 1%.
So consumer confidence is just completely hollowed out.
Exactly.
So the math doesn't actually add up then. If real estate, which is the bedrock of their wealth, has cratered, and nobody's buying anything at the retail level, the only way they hit 4.3% growth is if the state is artificially inflating the numbers.
Yep, by subsidizing and buying its own manufactured goods. You've hit on the core mechanism there.
That's great.
It's less of an economic miracle and more like a company taking out massive loans to buy their own products so their quarterly earnings report looks good to Wall Street.
The top-line revenue looks phenomenal, but the vault is completely empty.
You got it.
Which explains the youth unemployment rate sitting at almost 15%.
Yeah.
And honestly, considering Beijing literally suspended and altered how they calculate youth unemployment back in 2023 when the numbers got too embarrassing, it's probably worse.
Oh, almost certainly worse.
This whole pivot to exporting state-directed tech just feels like a desperate Band-Aid for a hopeless younger generation that, can't buy homes or find jobs.
Right. And the thing is, Both of these nations have the central control and the financial levers to fund their immediate strategic competitions today. They aren't facing imminent collapse tomorrow morning.
But they are achieving this by actively bleeding their own citizens' economic futures.
Exactly. They are trading tomorrow's stability for today's image.
Which leaves you with this final thought to chew on. If these massive state engines are running almost entirely on the fumes of civilian sacrifice and, well, carefully suppressed data, what happens when a localized protest over a frozen bank account or a fistfight at an empty gas pump suddenly sparks a nationwide fire? You can only burn the furniture for so long before the whole house goes up in flames.